Hello, good morning or good afternoon, everyone. Welcome to today's webinar on tapping into the foreign national market. Now, we want this webinar to be interactive. We want it to be fun. We want to make sure that you are an active part of it. So go ahead and use the little questions tab throughout the webinar to insert your comments, join the conversation, and ask questions, and we'll have our speakers answer them for you. At the end of the webinar, we are also going to have a dedicated question and answer session. So for any questions that we didn't quite get to. So with that, I would like to introduce today's speakers, Jay, Shelley, and Michael. Jay, why don't you introduce yourself?
Hi, my name is Jay Goldberg. I'm the regional manager of the state of Florida for LendSure Mortgage Corporation. I have over 30 years of lending experience in both subprime and non-QM. And I'm ready to do whatever you need to get your loans done.
Awesome, thank you. Shelley?
Hi, I'm Shelley Mullis. I'm the credit manager of Eastern Operations. I've been with LendSure for 2.5 years now and also have 30-ish years in the mortgage industry.
Thank you, Shelley. Michael?
Hi, I'm Michael Cavallaro, Eastern U.S. Sales Manager. I joined LendSure in May, and like the panel, over 30 years of experience in the mortgage industry.
Thank you. Take it away, Michael.
So today we've got the agenda that I'd like to just talk a little bit about what we're going to talk about today. We're going to talk about a little bit about LendSure and the background of LendSure, the foreign national market, who are foreign nationals that actually purchases our loans, the destinations that they like to purchase in, and a little bit about the underwriting guidelines of foreign national borrowers. We also have a couple of scenarios that we'd like to tap into to talk about them, actual live loans that we've closed, and a little bit about how we can help you market to the foreign national business. The other thing before we end our webinar today, we'll talk a little bit further about LendSure and some of our other products that and loans that we can offer to you. And of course, we'll take some questions and answers. So a little bit about us, right? So we were founded in 2015. We're headquartered in San Diego, where our West Coast operation is. We also have 2 regional operations on the East Coast, one in Rhode Island and one in Georgia. We started to securitize our own loans in 2017. We have a team, as we spoke today about the panel, a very highly experienced mortgage team. And we currently lend in most of the country, 44 states. And as we're broadcasting today in this webinar, we're probably adding a couple of extra states, as we speak. So we commonly ask today, what is a non-QM loan, right? So today you ask someone if you have experience in the mortgage origination field, and they say, I've been originating loans 10 years, 15 years. Chances are an originator with 10 years experience may never even experience a non-QM loan, or thought, they thought it was a non-QM loan, but at some point, they just don't have the firsthand experience of what non-QM is. Over the years, loans that fall out of Fannie Mae and Freddie Mac have been called, many names, many acronyms for them. But one thing we're not is the subprime market. We're not a subprime lender. In fact, you'll find that we are actually an A lender, where the borrowers has the credit. They certainly have the asset base. They have got high FICO scores, but they just may fall out of the Fannie Mae, Freddie Mac world. For a perfect example, maybe we calculate the income a little differently than Fannie and Freddie do. So we'll say that we're not a Fannie and Freddie lender. We're not an FHA lender. We certainly don't get into a foreclosure or bail-like type of loan. So moving on to specifically about our webinar today, right? The foreign national market and what that is. In the last 12 months or so, right, there was over $54 billion in annual purchasing of foreign nationals buying properties in the United States. Over 100,000 of those individual buyers. And we find that statistically shows that they're buying properties, a good percentage of them, well over $1 million. In fact, the average purchase is somewhere, just under $300,000 here in the U.S. So where are they, where are the national up? Where are they coming from, right? So we can see by just looking at our graph here, you've got 8% in Canada, 7% in Mexico, China is a big portion of our business, India, United Kingdom. And, destination here in the U.S. Again, and this is statistics, it is countrywide, but we do find a good portion in Florida, California, obviously Texas, Arizona, and the East Coast, New York, New Jersey. And I probably would add Boston to that, being from the Northeast. It's a prevalent foreign national business in the Asian community. Jay, I think you're going to talk a little bit about who foreign nationals are.
Generally, a foreign national is any person that cannot permanently reside in the United States. If their income is derived from abroad, or they come into the United States for vacation purposes, and in some cases, minor work-related purposes, they are foreign nationals. If they are paid in the U.S. funds on U.S. soil, they generally are not foreign nationals. We lend to people all over the world. There's very few limitations on who will qualify as a foreign national. There's a few countries out there that there are restrictions on. Generally, your places that are unsavory in the eyes of their country or our country. Venezuela is one that comes up all the time. A few Mideastern countries. But for the most part, we do lend to borrowers in most countries. Generally, if their income is derived from foreign soil and they have a foreign passport, don't have a U.S. green card, or in most cases, a non-permanent resident alien card, they would be a foreign national.
Jay, Jason wants to know if someone with an I-10 would be considered a foreign national.
Now, an I-10, which LendSure does have a very aggressive I-10 program. An I-10 is generally living in the United States, utilizing the U.S. banking system and paying taxes to the IRS. So our particular I-10 product would take over instead of a foreign national.
Okay, thank you. And Shelley, why don't you talk to us a little bit about LendSure's foreign national program?
We're going to cover some of the doc requirements on the foreign nationals. The visa types that are allowed are the B1, B2, F1, H2, H3I, J1, O2, P1, P2, the TN NAFTA, and laser visa. We do have a no visa program available for the investor transactions only, and the loan must close in an LLC or a corporation that's domiciled in the U.S. with a domestic agent for service of process. And the following are required as evidence that the borrower is in the U.S. legally. We need a copy of the borrower's valid and unexpired passport, including the photograph, copy of the borrower's valid unexpired visa, including the photograph, or an I-797 form with valid extension dates, and an I-94. The borrowers from countries that are participating in State Department visa waiver programs are not required to provide a valid visa. You can determine which countries are participating in that. There's the link at the bottom. One that comes to mind is the UK.
Okay, great.
Verifying the foreign credit, you need 3 active trade lines with a 2-year history. No derogatory credit history is permitted. In some cases, foreign checking and savings accounts can count as trade lines. Any combination of the following is acceptable to arrive at the trade line requirement. Trade lines evidence via U.S. credit report and or trade lines evidence via an international credit report and or trade lines evidence via credit reference letters from verified financial institution in the borrower's country of origin.
Okay.
Just to add on to that for a second, very few countries out there have organized credit reports. The UK does, and Canada does, but in most cases we are using alternative forms of credit. So don't get worried about trying to pull credit from Germany or anywhere out there. That the credit reference letters probably hit close to 90% of the loans that we are doing.
Okay.
Right. I've also seen that in some cases as well. I think we have an example where we've done a foreign national loan for siblings that are going to school here in America, and they had a prior rental history, and we've used that VOR as part of the loan program as well, where the parent was paying the rent for the student.
Josh wants to know, when you mentioned Venezuela, can you work with clients from there? Wasn't clear on that.
Venezuela is very tricky because of the nature of their government and the relationship with the U.S. They are on the registered OFAC list. So we cannot do anything with anybody from Venezuela if their money is derived from Venezuela. In isolated cases, just because they have a Venezuelan passport doesn't mean they're out. And one example where I had a Venezuelan national that had moved to Spain, set up residency in Spain, open a business in Spain, utilize the full Spanish banking system, and I was able to get that loan done even though they were holding a Venezuelan passport. One of the places where you really want to be concerned, especially in South America, is the relationships between Brazil and Venezuela, or Honduras and a few other countries down there. They don't have the restrictions that the U.S. has. So if a borrower is working in Brazil, you want to make sure that any of their income isn't derived from a Venezuelan country. I see it a lot in the banking industry that Venezuela has banks in Brazil, so that would be an ineligible borrower. But that would be a one-off. Definitely contact your LendSure account rep to get clarification from senior management on the acceptability of that person.
Okay. And David wants to know, do you require that all the documentation be translated into English, or can they provide the documents in the language of the country they reside in?
No, we definitely require that they are translated into English by a
Okay.
certified translator as well.
Okay. And is that something that the borrower needs to do, the broker, or LendSure does that?
LendSure does not do it. The broker needs to do it.
Okay, great. And Clayton wants to know, if the B1 visa is expired and they applied for a renewal but have not received it yet, can we use the expired visa and the application for renewal?
That's correct. Yes, we can. Oh, I'm sorry, Jill.
That's okay.
That situation is coming up a lot right now in this COVID, post-COVID, current COVID era, that some of the appointments are pushed out up to 2 years. So if we have evidence that they did apply for extension prior to expiration, and then have their hearing date, which I've seen them go all the way out to 2024 at this point, those would be acceptable forms with that documentation.
Okay, great. And take it away, Shelley.
Okay, verifying your credit with the reference letters. One reference letter must be from an internationally known financial institution. Each letter of reference must state the type and length of the relationship, how the account is held, the payment amount, the outstanding balance and status of the account, including a minimum 12-month payment history. A single reference source may provide verification of multiple accounts. Like if they have an account with a particular bank and they have a credit card with them, and maybe their mortgage loan or another kind of installment, you can put all of those on one reference letter to meet your requirements. The currency has to be converted to US dollars, and it needs to be signed and dated by a certified translator. On that, we will convert them in-house, like for updates or items like that, but you should get it converted to make sure it's going to qualify. All documents must be translated into English and by a certified translator.
Thanks.
Right. Using the reference letter from the bank, particularly credit card reference letters, is a common reference that we usually see with a foreign national loan.
Thanks. Ada wants to know if this program is available for someone in Ecuador or Peru with no visa.
I do not think either of those countries are on visa waiver programs, but I think Shelley can speak to the fact of setting up an LLC to get
Right.
around you needing to have a visa. Is that correct, Shelley?
Right, you can do it as long as you have, it has to be set up in the United States with a service agent in the United States.
Okay,
And does
great.
that LLC have to be specific to the transaction?
No, it does not have to be specific to the transaction. A lot of times we see investors that will have an LLC set up in Florida. You know, if you close in an LLC, you need verification that they are in good standing in the state the property is in. So keep that in mind. It doesn't have to necessarily be set up in that state, but they do have to be registered in that state and in good standing.
So Ada has a follow-up question on that, asking if there's any seasoning required on the LLC.
No, there is
Not that
not.
I'm aware of.
No, they can set the. We prefer to know that the loan is going to close in an LLC as early as possible in the deal, just so we can get the deal to the table in a timely fashion, so there's no delay at the end by setting up an LLC. But there is no seasoning required. And also back to what Shelley has said about having a registered agent in the United States, if you do set up a LLC on a service like LegalZoom, they will automatically give you a registered agent in the United States. So you don't have to find somebody in the United States to be your registered agent or agent of service, just part of the setup of the LLC if you use one of those third-party services.
All right, thank you,
And
Jay.
of course, the
Oh, go ahead,
LLC name mirrored on the PNS.
Okay. And Michael, yes, these slides will be available after the presentation. I'm going to send a thank you email about an hour after the webinar, and look for a link to the slide deck there along with the recording of this webinar that you can share with everyone. Kimberly wants to know if this is available for any African countries.
I have done loans out of some of the African countries, and I have not had any presented to me that were restricted. So again, it would be on the OFAC list, but I cannot think of an African country that is on the OFAC list at this current time.
Okay, thank you. And Shelley?
Okay, verifying foreign income. We do want you to be aware that we do offer this for salaried wage earners, but we really don't see very many of these. Most of the foreign nationals that we see are self-employed borrowers, but it is available. These are the guidelines of what you would need. It's income similar to what you would provide in the United States.
Okay.
Again, like I said, most of our borrowers are self-employed. So what you would need on this, the borrower must be self-employed for a minimum of 2 years, evidenced by a letter from his or her CPA or a local equivalent accountant on their letterhead. The letter must include income figures for each of the last 2 years and year-to-date income. A business license where required, and the organization documents should be provided. A
And
copy
also,
of the accountant. Oh, I'm sorry, Jay.
sorry, on the accountant letter, just as a little trick, just so you know, back to the credit. A lot of the people, especially in South America and a lot of countries out there, their primary residence are free and clear, so we're not going to be able to get a housing rating.
Right.
We request people to add the housing rating onto the CPA letter. You know, Mr. Green's house is free and clear, all taxes and insurance are paid as agreed, and that is acceptable to our underwriting department.
As long as the CPA tells us what the property taxes are, that helps. And we do know that most countries do not have hazard insurance, but he needs to spell that out if they don't have insurance on their current property. But typically they will have, they will have the property taxes. And I mean, you don't have to have the CPA confirm that amount if you can get documentation by another means, like a tax certificate or statement. But it is a lot easier if you get the accountant just to put it all on one letter.
Okay.
These documents also, well, we do, let me go back. We do require a copy of the accountant's current license, and we will independently verify that, by Google. Typically, we have been very successful in verifying CPA information in other countries that way. All of the documents have to be translated by an independent certified translator, and you can use, I think we decided this is Baidu, Chinese Google. I'm not sure if I've totally destroyed that name, and if I have, I'm sorry, to determine the existence of business and the accountant, and that is acceptable for Chinese foreign nationals.
Thank you, Shelley. Jared wants to know if currency converted, is Google conversion okay?
In a lot of cases, when you're getting your translated documents, the translator will not translate numbers or currency. So we will take supplemental form or just a document of the conversion on there with a conversion chart. A lot of times either the AE will do it or the broker will do it. But we understand that those are not converted by the translators.
Okay, great. And Jay, here's a question for you from Dennis. What are the requirements again for someone in Canada who wants to buy an investment property in Florida?
Canadians are some of the easiest. Most foreign nationals are very easy deals, but Canadians are very easy because their banking system and their credit system is mirrored of the US system. So generally you would just need a full 1003, Canadian credit report, which is in English in 99% of the cases. Hopefully they have the trade lines. Income would come right down the stream. If it's a wage earner, VOE only, that we would verify, or the CPA letter. Most people in Canada do have mortgages, so you would be getting a mortgage rating, and then it's just the movement of cash from there. Canada is a visa waiver country, so you just need your passport at that point. Very, very easy deal.
Okay, great. Do you guys know if Colombia is an eligible country?
Colombia is an eligible country.
Okay, great. Shelley, why don't you talk to us about down payments?
Okay, we do require a minimum of 6 months reserves. Gift funds may be acceptable, but they do have to be transferred to a U.S. domiciled account in the borrower's name within 30 days of closing. Business accounts are eligible for reserves. Reserves can remain at the financial institution in the borrower's home country.
Shelley, I have a question here. The reserves have to be in the U.S. bank, or can they be foreign reserves?
No, they can be foreign reserves. Just the cash to close. We do have a guideline that we require that the assets be held or that they are transferred into a U.S. account, but we have been successful recently in getting verification that the title company will accept transfer of funds depending on the country. So if we're able to prove that, we don't require that the funds be transferred to the U.S.
That's a good point.
And just for clarification, on the transfer of money coming in, the money does not have to season in a U.S. bank for 30 days. Some lenders do require the money to sit in the United States. We will take the money with the paper trail up to include the day before closing or the day before your CTC comes out. So you do not have to meet a 30-day resting period of money.
In some countries, the amount of cash that can come out from a single person is limited. And I see where sometimes they'll send the funds in as a multiple gift from donors, but the funds are originally the borrowers. And the same thing with the wire trail into the. In fact, sometimes they will send it directly to the closing agent with the proper
we just have to document where it came from and verify that it's borrower's funds. Or if it's gift funds, then we have to document that with traditional gift means.
Very good.
It's very common, especially coming out of the Eastern Rim countries that have limitations on the amount of money that comes out of the country. We get very flexible on those gift letters as long as we can see that money hit the gifter's account. We have the gift letter and it comes back into the U.S. domicile or to the title company. Recently, we just closed a loan that had 12 different gifts on it. It was a very large loan. There was a $50,000 maximum transfer of money. So they ended up having to use 12 separate gifts to get the money.
Big family.
Big family. But we also do not require birth certificates or any forms of blood tests along the way.
All right, great.
Okay.
And Jay, why don't you talk us through our foreign national program?
The first thing that you really need to know, because LendSure is a very unique lender. Most of our competition are more of an in-the-box lender, where LendSure is generally a self-lending, risk-based lender. So we cannot make our borrowers fit our guidelines. We need to kind of duck and weave around to make the borrowers fit into, into what we will do. And in a lot of cases we do. So your first line of attack is contacting your LendSure account executive with your scenario to start structuring that file. And the one thing that you want to know about a foreign national deal, because of foreign documents and things, you want to get it right the first time, because if a document comes in wrong and you have to go back and get a secondary CPA letter, that can really be a pain. So you really want to be in tune with your LendSure rep to walk you through. We don't require any kind of domestic credit scores. They don't, in most cases, they don't. We'll lend up to 75% with no MI. And in true reality, LendSure has a specialty program that we call stacking, that we actually will go all the way up to 77%. And that extra 2% is used for broker compensation or lender discount. We do allow cash out up to 70%. We also have a DSCR program. We don't do a lot of DSCRs because most of the borrowers that are buying do have the adequate documentation, and the documentation is so minimal that they need. And there is a pretty substantial hit for the ease of a DSCR. Non-warrantable condos are acceptable. And business purpose investment loan qualify on the start rate, not on the amortized. We will do a 10-year interest only with a 40-year AM and qualify them on the actual start rate, not the amortized, especially in the DSCR program, which really opens up the ability to make your income go further.
And if I can just expand here just a bit, a couple of things. We will do it as a true non-owner investment property, where we see some local banks will do some foreign national business, in that $55 million worth of business that was written last year, but they want to tie, most of them want to tie the borrower as their second home, where we will actually do the loan as a true coming in as an investment property. And that's good, just to realize with your borrowers, because sometimes you'll find your realtors are actually networking for investment foreign borrowers. So it's a good source of a loan for them. The other thing I'd like to mention out that with Jay, we realize that a lot of brokers, a lot of people on the call today maybe have never done a foreign national loan. And as Jay mentioned out, the first line is to reach out to your account executive, and Rose will certainly put that out there, how to do that in your specific areas. But we will walk you through the process, and as Jay said earlier, sometimes they are an easy process, but they can be a little different. So we want to be able to see that we will give you the path to walk through and actually how to put the loan together.
Just to let you know some of the, going from start to finish, one of my account executives in Palm Beach, the first time she did a foreign national loan, she came to me and said she would never ever do another one of these ever again, just because of the lack of understanding and the learning process. Within the last year, she's practically at 90% foreign national loans. She's a foreign national guru, and she has figured out how easy they are. And plus, with the training and the partnership with the brokers, it's given the brokers a very big vein of business that they can pick up, because they've also learned along with that account executive how easy these are. And once you get into this market, they do flood in. I'm currently working with a lot of builders. D.R. Horton is one, and they're getting ready to kick off an international foreign national marketing campaign for their U.S. properties. So this market is expanding rapidly.
Okay. Anna wants to know if we do foreign national condotel loans in Florida.
Yes, we do.
Condotels are very interesting. LendSure has become almost an industry leader in condotels. Per our guidelines, it is not a property type, but because they've been popping up, for that right borrower, that is an exception that we have been making, especially if everything else falls in line and there isn't a lot of wiggling around. But that is a senior management approved loan, but we are doing them.
Okay, great. And there you go.
And we will also do a condotel as a second home, if that's the intended use on that condotel.
Very good. Jay, why don't you walk us through some scenarios?
I think Mr. Mike
Yeah,
wants to talk to us about Boston first because he's so proud of that
Yeah, I
city.
think I actually just signed off on this loan here. This one here was a borrower whose son, I believe, is going to his third year at BU. And everyone knows, typical when, especially on the back bay of Boston, that the rents can be very expensive for a 300 square foot, one room that you're sharing off with someone else. So they decided they wanted to purchase the loan for a couple of reasons. One, obviously, for his son can finish his schooling and post-grad schooling, but also they planned on, his son to work here in the States after school. So hence buying was the way to go. In this case, the loan was a 675 purchase. We did a $500,000 loan at 75 LTV. I believe it was a non-warrantable condo as well. I know it's not up there on the slide here. Of course, being a foreign national borrower, we had no FICO and no social. The borrower did have a B1 visa, so they were able to actually travel here to sign the documents. But I believe Shelley talked about we can also do a wire electronic signatures. Maybe we can talk a little bit about that, before we, at the end. And of course, we got so what we end up doing, we end up giving them a foreign national loan. We use their income letter and the trade references. And one of the references we actually used was the rental from the son, who's his current rental that the father had signed the lease for in the States. He had co-signed on the lease. And this one here too, getting the down payment money out of China was a little bit, limited. So they used gift funds from other family members to take the borrower's assets into the country.
Okay, great.
And this next scenario is a scenario that just happened recently, and actually another loan is coming up from the same borrower currently. He's an international pilot for Qatar Airways, but he's a long haul pilot, so he has limitations on return trips because of how long the trip's coming in. So he spends the majority of his time in hotels. Qatar Airways pays for his hotels, and if the pilots don't use their hotels, they can actually use that as a financial benefit and get paid for not using the airline's bookings. So he was flying directly into Miami on a regular basis, staying in hotels, decided to buy a crash pad or a second home there. He was established. He was a wage earner, so it was a very simple deal, a VOE from Qatar Airway. Qatar is a known company, so it was very easy to verify that. When he was in the United States, getting ready to do this, he did open up a U.S. account. He had the availability to be here. Sometimes people can't come, but he was able to open up that account and put money into that account. We did this loan as a second home. That triggered the fact that he's not going to have a prepayment penalty. On an investment property, there would be a prepayment penalty. Second homes, no prepayment penalties. Not that that was a driving factor of the deal, but it was a benefit of the deal. Closing went through extremely easy. The benefit to the borrower was threefold. He picked up the extra income from not utilizing the corporate benefit. And then when he wasn't using the property, he was able to do a little bit of Airbnb on it, still maintaining it as a second home. And then he could have his own stuff, there in a more comfortable place. And now he's come back to us asking to do it again on the West Coast, so he can open up his travels to the West Coast and actually pick up more of that long haul and make actually more money. So he'll actually have second home, an investment, or possibly a second home. Both of them will be minor income producing and open him up to being able to make more income by picking up more long haul routes. Very easy 21-day close kind of loan.
All right, fantastic.
Is that your actual borrower?
I'm sorry?
Is that the picture of your borrower?
I don't know. Most pilots kind of have more of that. I'm just going to leave it at that. No, that is not the borrower.
And and Paul, yes, I apologize. I did misspell Qatar. My bad.
Gross.
I'm
Uh,
sorry.
this second scenario is really, really starting to come up more and more, especially in the COVID era. And then, with some of the political unrest in the world and, religious kind of separations, where the U.S. Universities are utilized by international students on a regular basis. We cannot do a foreign national loan for somebody that's here on a student visa because that is not an acceptable visa, but the parents are always available. And so what we're seeing a lot around all universities around anywhere in the country, not just in the hotbed foreign national area, is that the parents are buying a second home around the university. And not only is it for their child, but it's also utilized in a lot of cases for their children's friends that are also in that religious sect or that social sect that they don't want to integrate definitely, deeper into the US, for their own personal reasons. And then upon graduation, they're either selling those properties or they're maintaining those properties as investment properties downstream. I currently have one right now that two students living in one house, and now the one student is moving on to a different university for grad school, and the parents picking up another property, near that university. And then downstream, they'll figure out what they're going to do. But it's getting very common to because people want to be a little bit more isolated, and a lot of people, especially from different countries out there, like to be, in their same cultural and religious sect. So it is getting extremely popular. All college campuses are a hotbed right now for foreign national. It's kind of, most people don't think of that when they're looking for good sources for foreign national purchases, but they are very, very, there's a very good income stream if you dive into that kind of arena there. Parents are out of the country. They don't want to come to the country to close. We do allow remote online notaries, so the borrower never has to come to the United States to close some of these loans. So it makes it very easy to accomplish what they wanted.
Okay. Paul wants to know if we're calling this the foreign kitty condo program.
Oh, you call it whatever you want. We just call it another closed loan. It's amazing how many of those are popping up now as different people talk. The word is getting out that it's a great housing source for college students, and then potential investment downstream. The third scenario I want to bring up is the easiest scenario. We've got a borrower that does not want to document everything. They're buying investment properties. They want the least passive resistance, the least amount of documents, the least certified translations. You can always switch over to a debt service loan where we're going to do an investment property, just utilizing the 1007 or the rent analysis to determine what the viability of the property is. These loans close very, very quickly. The documentations are very limited. 1003, the movement of the assets and the appraisal are your primary documents. Of course, you need title hazard and the other things that you need on all transactions. There is an adder to do a DSCR, but the ease of a DSCR loan in the foreign national arena is just simple loan. And you can close them very fast.
Okay. How do we find these people?
Well, that's a great question. We have an account executive out on the West Coast who's of Chinese origin, and she got involved with AREA, which is Asian Real Estate Association of America, kind of just fell into it. And yes, she does speak Chinese, Mandarin, and a few other languages out there. In the last 3 years, she went from closing a few loans a month in foreign nationals up to, I think last month she closed 41 foreign national loans, almost all directed through AREA. A lot of the different groups of people. They get into clubs and organizations, churches, and once your name gets out that you have the ability, or the broker's name gets out that they have the ability, they can start circulating very deep into these groups. Between Google, Facebook, LinkedIn, Twitter, local churches, even some of your local financial professionals that might be handling some foreign income are all streams to find foreign nationals. They're a lot easier to find than you would probably think. A little bit of effort and they will start popping out of the woodwork. Also, new housing developments. They have a lot of people coming in looking at houses, and a lot of these home builders do not have sources with their local brokerage that have a foreign national product. And we're going to be talking about some private market labeling here in a minute, but that's also another good place to engage with those salespeople to find out what they're doing with the people that are coming in to look at properties. I'm sure, Mike, you've got some other ideas.
I would say that if anybody on the call here that's an originator simply went to your realtor referrals and asked one open-ended question: what are you doing with your foreign national borrowers? You'll get an answer, either I don't have an access, or someone they may be using may be a local bank. And there it goes. That'll open up the opportunity for you by simply asking that question, because that's exactly what happens. Even if they're availability, sometimes there are local banks where it's not, that product is just not available to a mortgage broker, quite frankly. So we're a source for that business that way. You can simply bring the relationship with your referral partner, your realtor referral partner, and then line up with the accredited account executive, and then you've got a partnership going. The other thing Jay mentioned is the ARIA. I personally belong to the chapter here in Boston, and I can tell you, very, very well organized. They have social events that it's very easy to go in and solicit business from them. They're very open, and like I says, they almost give you the path to get business there in that community.
You also have restaurant pegboards. A lot of times, some of the smaller restaurants, have a place where you can put your card, a small flyer or something like that, referring to foreign national lending. You can drive deep into that sector based on that food type, Indian food, Chinese food. I mean, it doesn't really matter. Wherever you can get into those groups of people and just be seen, they will come out. And once you close that first loan, the word goes out very rapidly, and you have reoccurring business from multiple streams.
One thing I also wanted to mention, in addition to ARIA, is NAREP, which is the National Association of Hispanic Real Estate Professionals. That's one that I'm a member of, and they have lots of networking events, both local, national, online events, where you can network with people who are specializing in serving the Hispanic community.
And you definitely can find a lot of these groups through LinkedIn searches and Facebook searches, with just a couple different tries at different words, put in those search boxes. You'll be surprised what you will find.
Okay. And speaking of marketing, I have put together for you guys a marketing resource kit, private label, so that all you have to do is put in your logo, put in your contact info, your disclaimer info, and you could start growing your network of foreign national loans today. In fact, I have something very special just for the attendees of today's webinar. I put together a private label version of this very presentation so that you can go out to different groups. You can do presentations to realtors, let them know that this is available to them. So go ahead, that's available here, in the private label one is available here, and look for the link to download the presentation in the thank you letter email that you're going to get from me in about an hour. Jay and Michael, why don't you talk to us about this?
Yeah. First of all, I want to, just thank everyone who participated in the webinar today. And I said earlier in the intro, we'll talk a little bit about other loan programs that we can offer here at LendSure. And if you look down, rather than just read them off the screen here, but these are just some of the other loans that we offer. Just want to expand on a couple. We talked about, non-warrantable condos. Some markets, just about everything that used to be a tree house is now a condo, and a lot of those fall into the non-warrantable area. So again, it's another open-ended question about, who you're funding your non-warrantable condos with. Jay mentioned earlier about condotels. We do that business. The 2 to 4 unit properties, right? This is really our DSCR program where, if you're not familiar with that, it's worth taking a little closer look at that, where we'll do a non-owner property based on the revenue of the property without taking the borrower's personal income into the equation. And, so that's a very, very, open program for anyone buying a non-owner property. Just about anything we write, we say we're an A lender, we service the A industry. Well, the biggest reason why we get those fallouts from the A industry, the A business, is income, where, particularly when you get into the jumbo loans, as we say, we some jumbo loans, cash outs to $1 million. A lot of those loans, once you get into the secondary market, if the income isn't mirrored perfectly over 2 years over a tax return, you're generally not getting the loan done. There's very small tolerances what the lenders will allow. We simply say, listen, let's just take a look at the and those borrowers generally are self-employed, and let's face it, they're taking advantage of the tax code, and they pay accountants to pay little taxable income as possible. Yet their businesses make gross very high numbers. So we take those borrowers, we have an expense factor we put in, and we just leverage them over with the income in their bank statements. And that again, that's a program that we if we didn't mention it here on the call, it's because even though it was listed as a foreign national loan, there are other loan programs that we really strive in, particularly with the asset depletion loans. In fact, you can bridge the two together. If you take the first top, take a borrower that has equity on their house and they've got a nice 401k with some funds in it, but they have equity and they want to sell one house to buy the other. We'll let them tap the equity on their house by using the assets that they have already in retirement. Those are areas that that we'll take a look at loans like that fall into our wheelhouse. Jay mentioned earlier that we can just about do anything we want to see on a 10-year interest only. Again, that allows more borrowers to qualify using a smaller DTI. A couple of other things too. We do a lot with the investment community. The 1031s exchanges are also loans that we'll take a look at. Probably missed a few. Jay, anything else come to mind here we should mention here?
Generally, what I tell brokers, if you have a loan that does not meet your GSEs or you can't get done through conforming sources, pick up the phone or send an email to your LendSure rep and talk through that deal. We are very out of the box deal oriented. LendSure is one of the few dedicated non-QM wholesale lenders. We do not have a retail side. We don't do any agency paper. We are only non-QM. We're non-QM specialists, and we are also self-funded. So we're not going to a third-party source at the end of the file to find out if we can or can't do the file. We isolate all of the white elephants or the problems in the loan right up front and get the exceptions or the compensating factors to get an exception up front, so we know early on in the file whether we're going to be able to close that file or if we're not going to. And we make a lot of turns and twists in the road to find ways. We are looking for ways to close loans, not ways to make loans harder to close. It all starts with communication. Our matrices, there's only so many words that can be put on those matrices. So right on our foreign national matrix, it says maximum loan amount of $500,000. We approved a $2.2 million foreign national loan yesterday. So to give you the idea, the flexibility that we have in our guidelines that aren't necessarily in writing. So your best resource is actually reaching out to us, telling us the story, letting us ask some questions, and figuring out a way to put that deal in into a closable fashion.
Awesome.
Right. Just to expand just a couple of seconds more on that, what Jay's saying is, we all heard the cliche, if it makes sense lender. We literally write about 35% of our business does not fit the matrix, but yet we know the borrowers are strong. As we said earlier, most of our borrowers have the high credit and assets. And if you're bringing those two things to the table and there's some other scar on the loan, we'll generally find a way around it.
Awesome.
Like, I got to see your matrices because I'm probably around 75%.
Dina wants to know about our bridge financing program. What is that?
Bridge financing is awesome. When you're driving down the road and that house is on the corner that your wife or your husband or your significant other always wanted, that's never been for sale, that sign hits the front yard and you need to have it because the porches are perfect, but you haven't even thought about selling your house, you can immediately go in, put an offer on that house. What we will do is we'll finance up to 75% of your departure property, pulling the equity out of that property to move over to your new property. And the big caveat that most of our competition, which is not a lot in this sector, we do not hit the bridge portion of that loan for any form of payment. It's done on a 12-month balloon with no expectation of payment. So people are borrowing, the interest rate on that loan is 6.99. If you take that down to the monthly level, it comes out that they're borrowing money at 0.56 per month. There's no prepayment penalty. So what happens is we pull the money out of that property, debt ratio falls in line with the purchase of the new property, and then that property gets listed, it gets sold, and the bridge loan is cleared. But the bridge has no ramifications on the ability to purchase the new property. Very, very popular. The big caveat is most lenders have some form of payment or some kind of debt calculation from that bridge into the new loan, which limits the borrowing ability. If you can get the end financing, you can get the bridge financing. The larger the loan, the more equity, but we will do those all the way down to $150,000, unfortunately. But in this rapid market of not having time to get ready to sell to buy, the bridge product has gone off the cuff. It's a very good, very easy, and that is a 2-loan product. And
we do require the loan on the new property as well.
Yeah, we have to have both sides of it.
Yeah.
Okay, fantastic. Okay. Michael and Jay?
Well,
I've really harped on this a lot. Go ahead, Mike, sorry.
Go ahead, Jay. Go ahead.
I've harped on this. I've brought it up 3 or 4 times already that the partnership is an individual partnership between our account executives and our management team. I speak to brokers all day long, so I don't sit back waiting for stuff. I'm very heavily involved, but loans come in continually that you would think on an original presentation, they would never ever happen. But after that conversation and start really diving into the loans, we do find a way to make those loans happen. Our account executives are extremely involved in the loans. We also process and service our loans in a unique fashion that we try to maintain a one-to-one relationship with our processors and our AEs. So you're not jumping into, you finish a loan today with Janice and then you have another loan that's sitting on Bob's desk. We build that relationship so you and Janice know how the process happens, how the presentation should look. Our processor knows how you work. So it expands into more of a partnership than just a processor, moving documents alone. We're very involved on every loan, and we have more desire to get your loans closed than in most cases you do. It surprises me that we're ahead of the game, begging brokers to get their loans closed, where some of the stories that I hear and other lenders that you can't get a phone call back, the AEs won't call. We are here to service you at all times.
So I'll add to this because Jake pretty much carried all the bullet points there. We know there's options in the non-Q1 segment. We understand that. But this is what we do. Like he says, we're not an A lender that has this side division that we want to try to grow. When we wake up in the morning, right? Shelly, how many loans do you look at? All non-QM, right? So this is what we do here at LendSure. We're non-QM lenders. And the other thing too is uniquely different. We want to know what the whole of the loan is. If you call up and have a frank conversation, I have this scenario, this is what the problem is. If there's a way around it and we still think that we have the borrowers who've given us that ability to pay, we're going to find a way to make the loan work. And that's uniquely different. We're not asking you to bring the loan in, spend 6 weeks over here only to get an answer from underwriting. We'll dissect into the whole of the loan up front, providing obviously you give us all the facts, and we'll try to take a look at that. And we do that uniquely different than we think some of our competitors do.
Just to give you an idea how crazy some things happen, I have a loan right now on my desk where the borrower was a realtor. They have not deposited any of their commissions for the whole year, and they want to do a bank statement deal. So we're getting copies of the checks, copies of the CDs from those closings with those dates, and then verification of individual deposits, 1099 from last year. This was that with the help of Shelley. We structured this loan so we have somebody that virtually was afraid to go to the bank but did make money, and we found a way to utilize that money for income, even knowing it's so far outside of the box. And that just came over as one of those, I got a crazy one, and we dove in and looked at it from 3 or 4 different angles to find a way to do it.
And Jay will certainly stretch that box.
Yeah, I tell everybody our guidelines are written in Jello.
Jay, why don't you talk about this one?
Thought I just did. A lot of times brokers will call me directly and ask how to expand their reach. I'm always available to talk to anybody and give people ideas of how to get out and find some of those opportunities that you might not be aware of. Non-QM is growing at such a rapid pace, and unless you get into the old timer subprime pre-2008, the newer age broker is so tied to the restrictive government lending, where non-QM has come in and grown in such a vast rate. And every Monday, whether you realize it or not, the GSEs are actually tightening a little bit more and more. Almost every week, they've dropped their non-owner occupied, the second homes down to 7%, which was a very large book of business. So even knowing you've got this perfect borrower in front of you, the GSE still won't take it, and it does convert over to a non-QM loan. I'll give you an example. We just closed a loan. It was a 13-day TRID loan. Borrower was chiropractor in New York, bought another chiropractic office that's been in existence for 20 years down in Miami. He used an SBA loan to buy the new business in Miami. The loan was going through conforming means, and the day before, the moving trucks had already pulled out of their exit property, and they had a condition for about an inquiry by the SBA. So the borrower, not trying to not disclose anything, just said that the SBA was the loan that they used to buy the new business in Miami. The underwriter immediately took that SBA loan and charged that against their DTI and turned the loan down. We looked at that SBA loan. It was primarily signed by the chiropractic office up north, and it was co-signed by the new office. We eliminated that debt as business debt and got that loan closed in 13 days in the TRID environment. So between LEs and CDs, we still got it done. And they just spent a couple days in a hotel and really saved the day, especially since they had 3 kids, 2 dogs, and 2 cats. But just we'll look at these situations differently than a lot of other people.
We moved down to Florida and have an alligator now.
Yeah, exactly. But its back is straight.
All right, so we're almost out of time, but I did want to get to everybody's questions. Paul had a quick statement about our bridge loan program. He says, excellent product, contingent offers don't fly these days. Ain't that the truth? I've got several questions from people. How do I submit a scenario? How do I find out who my rep is? How do I get more info on our investment program? You guys are going to get an email from me in about an hour with all the links and resources. Go ahead and reply to that. I will respond right away, and I will connect you with your LendSure account executive so you can start talking your deals right away. In addition, I'm going to ask the account executives to follow up with everybody who attended, just to make sure that you guys have everything that you need within the next few days. Davin wants to know if you could explain what a DSCR is.
A DSCR, that's a debt service or an investor cash flow loan. Generally, your whole loan qualification, other than credit, would be based on the the 1007 or the rent analysis, how much is that property going to rent in today's market versus your principal, interest, taxes, insurance, and association. If your rent schedule is equal to or greater, that would put you at a 1.0. That's an automatic approval. We also have programs at reduced LTVs down to an actual 0.75 where the rental property is actually showing a loss. So generally those deals need a 1003, a credit report, an appraisal, and the cash to close on them. And then your customary closing docs. Very, very easy loans. We will do up to 10 for an individual borrower, up to $5 million.
Okay.
And just to expand a bit, so we're looking at the borrower's credit for their score, and we don't consider the borrower's personal income into the debt ratio on the property. So the property stands alone, if you
Awesome.
would. And that's the difference.
What is the close time frame for foreign national loans?
Generally,
Shelley,
our turn times, at least on each of our teams, run a little bit differently. But generally,
Shelley can answer that. How clean is the file, right, Shelley?
That's right.
Generally, we will do a full pre-qualification. I consider it a pre-TRID underwrite on the front side. We deliver that back to you in 24 to 48 hours. At that point, we go into the TRID environment, and we're generally average a day 2 LE. Our underwriting time currently, I sell 6 to 9 days. We've been triggering a little bit quicker than that, but I like to under promise and over deliver. So generally I'm going to stick with the 6 to 9 days. It drops into processing. As soon as you get your documents to us, we generally will clear all documents in 72 hours. Again, a lot of times we're quicker than that, but I sell 72 hours, 1 day to CTC, 1 day to funds. So we can close very quickly, and with a broker partnership, little tricks can happen in heat cases that can make loans close even quicker than that. So generally, on a non-TRID loan with a broker that is prepared to get everything quickly and adequately, 10 to 12 days. On a TRID loan, you're looking at 14 days to however many more days you want to add on to get the stuff that we need. We're very quick. The biggest delay usually comes in the acquisition of the actual documents needed to close. And of course, right now with the delays and appraisals coming in, that's always something that you need to watch out for on what your real timelines are going to be.
Okay, thanks.
And most of these loans are purchases, so we're generally managing to the PNS date.
Okay. And Michael wants to know, I'm not sure I understand this, maybe you guys can understand this. Fannie does not allow POA to be used on cash out transactions. Is this doable in this program regarding the borrower need not be stateside comment?
No POA. Well, we can expand on that with the electronic notary, right, Shep? That they're referring to?
We've done a couple of power of attorneys. They're not restrictive as far as the cash out goes. We would just need a letter of explanation as to why it was needed and a specific power of attorney to the transaction.
We don't see that come up often because we allow the remote online notary. So if you're going to go to a POA, you're going to have to pay for that. You're going to have it translated acceptably, where the title company can just set up a remote online notary and you don't have to worry about a POA.
Okay. David wants to know, is there any chance you will be opening up a lender paid comp for brokers in the near future?
We currently do allow lender paid comp. There is one, everybody's legal system looks at things a little differently. So depending on your loan size, lender paid comp can trigger our interpretation of Section 32 or a high cost loan. So you can talk to your individual AE about lender paid comp, and we can make that happen. We will not disclose lender paid, we will not hide lender paid comp like on the conforming side. So whether it's paid to you from us or it's paid to you from the borrower, it's still going to land on your CD, so it will be seen. One of the unique things that LendSure does that nobody else that I know of does is we will allow you to finance your broker compensation or loan discount on top of your loans in most of our LTV brackets and in all of our product spectrum. So we can save the borrower a lot of money, cash out of their pocket, or get very aggressive in rates by financing a rate buy down. To give you an idea.
Either way, if we were doing the lender pay traditional, the rate would be higher. And what Jay's saying is the way we do the math there will allow it to be financed in, not taken away from their max LTV. And they effectively, someone buying an investment property, they get to use the future equity or the current equity of their property to lower their rates to compensate the broker.
Awesome.
And we'll gladly explain that to anybody individually if they want to reach in personally, through you, Rose, after the seminar is over.
Awesome. And Eduardo, yes, I'm going to be sending you a copy of the recording and the slide deck. And within the slide deck, yes, there is a link to the list of countries allowed for this program. All right, we're going to wrap it up. I got 3 quick questions because I know we're out of time. What's our required coverage ratio, maximum units, and down payment from 3 different people?
The maximum coverage ratio for a DSCR, the minimum coverage ratio would be 0.75.
Yeah,
But with
that's
the
what they're
reduced
asking.
LTV, the standard would be 1.0. I think that answers that question.
I think that's probably the. We'll go down to 1 point. We'll go down underwater where the property, in some cases, it's LTV sensitive, right, Shelley? Where if the
Yes.
property is bringing in less money than the current rental, we'll still
That's on a
consider the
purchase. It's a purchase only,
on a
less
purchase
than
only, correct.
70%.
And we will go
70%
down to
or
about 0.75.
And the maximum number of units that we'll do?
We'll do 10
Or-
loans for an individual
per
borrower.
person, I thought you were talking about, and 4 unit, like a 4 unit property.
Okay. And what's the LTV on the foreign national program?
The maximum LTV would be 75/77 if you're financing your borrower compensation or rate buy down.
All right. Well, with that, I want to thank our speakers for joining us today, and I want to thank all of our attendees for joining us. Jay, do you have any parting words for our audience?
The best thing I can say is just pick up the phone and call either a LendSure manager or a LendSure account executive and let us do the thinking for you and help you structure those loans so we can get the loans in here in a closable fashion right up front, making the process as easy as possible.
Thank you. Michael?
I wanted to just say, thank you for joining us today, and we look forward to doing some business with you.
All right. Shelley?
Same thing. Thank you for joining us. We appreciate you taking time out of your day to learn a little bit more about this program, and we look forward to getting more of your business.
All right. Have a great day, everyone. Thank you so much.
Thank you.
Come on.